based on what we know now, and things could certainly change, is there any change in how you look at the market and where you're investing?
Not really, Brian. And thanks for having me this morning. I do think that the fact that the election's behind us bodes well for markets next year. What makes it a little bit tricky is normally you would have more support from the Federal Reserve in cutting rates after the midterm elections. That's obviously not going to happen unless the economy in the first half dramatically decelerates and inflation really comes down. Because typically the president wants to focus on his reelection prospects and would want to have more stimulus coming in the form of additional liquidity. So that's what makes things a little bit tricky. I'm just going back to the old playbook of focusing on companies that are more attractively valued from a price earnings multiple, price to book, price to cash flow, so on and so forth.
Yeah, well, you said the election, Dan, was behind us. We may still have a month to go.
Essentially, yes. Yeah, essentially behind us.
How about this? Yeah. The bulk of it is. Ivory Johnson, again, same question to you. Based on what we know and what we still don't, do you alter what you're doing?
No, I wouldn't use politics as the basis for an investment thesis. I live 10 blocks from the United States Capitol building. We see politics more as an industry than an effective, governing body. If the GOP does in fact take control of the Senate, it looks like they're going to flip the House. They campaigned on their ability to lower inflation, rather. So that's a more hawkish stance. And the likelihood, as was pointed out, that they'll come up with a stimulus package to facilitate economic growth goes down significantly. The problem is our GDP is still decelerating. We go from negative 8.5% GDP growth in the second quarter of 2020 to 12.5% in second quarter to 21. Now it's 1.8%. That's really the problem, is that, the inflation, while still coming down, it's not going to decline more faster than revenues, and that bleeds into corporate profits. So I don't think the political issue is going to be something I would hang my hat on.
Well, as well said, what you said, of course, living in D.C., you know that D.C., I've said many times, both parties, really the biggest business in the world is just the business of sort of government in Washington, D.C. Dan, we go back. We were so focused on the Fed for months. We've kind of been focused on the elections, obviously, in the near term. We've got that CPI, the inflation data tomorrow. I mean, outside of politics, I would imagine we're just kind of going back to the playbook of what's Jay Powell and co. going to do? Are they going to go 75 or 50 in December?
The CPI numbers are going to really tell the story. If inflation continues to run hot, what are their choices? They have to stay in front of inflation, the inflationary pressures, because history has shown when you don't have a consistent policy and stamp out inflation very early with more aggressive policy, you can really prolong those inflationary pressures like what happened in the 1970s.
Yeah, and whether we go down, Ivory, from 8% inflation to 6%, I mean, let's be clear that it's still red hot. Is cash? I mean, we had a nice market run up in October. Don't want to take anything away from that. One of the best months for the Dow ever. But is cash in many ways still king until we get more clarity and visibility?
I think cash makes a lot of sense right now. Sometimes, a lawyer once told me sometimes it's winning is not losing badly. And so on a relative basis, while you might lose your purchasing power, it's a great place to hide right now. I don't think we're out of the woods. If you look at consumer credit, it's gone parabolic. Consumers borrowed another $25 billion in September. Personal savings rates has declined pretty fast, the second lowest in 14 years. U.S. pending home sales down 31% year over year. So let's not forget, 70% of our economy is a function of consumer spending, and the consumers tapped out at a time when mortgage rates have more than doubled. So I don't think we're out of the woods. And the problem is when people go to cash, the dollar goes up, and that's become a wrecking ball, not just in the United States, but it's had global implications as well.